morning, Gavin Chamberlain, CEO of Bannerman Energy. Really would like to bring you up to speed on our project and also introduce Mate Horgan, who's just joined us as VP Business Development and Investor Relations.
Great, Gavin, good to see you again. And Matt, nice to meet you. In fact, we'll start with you, Matt. Where have you come from? What's your background? What can you tell us?
Yeah, Matt, good to connect and great to chat. So I've had around 15 years experience in the mining sector. That's been across big companies and junior cap companies, but then also a number of different roles as well. So I actually started life as a chemical engineer, then transitioned into commercial and corporate development roles, and then also spent a couple of years in investment banking, specifically focused on M&A within the mining space. So more recently, focused on development projects within Africa. And so my last role was head of corporate development and investor relations for ASX listed Peak Rare Earths, where I was helping support the funding and development of the Nguala project.
Okay, brilliant. Well, Matt, nice to meet you, and good to have you in on this conversation. I think that, as you said, Gavin, it would be great to get an update on some of the project execution and timelines so we understand where you're at. So you're kind of transitioning into this kind of full-blown construction phase. Can you kind of break down the next kind of milestones of the next 6 to 12 months and where you're at today?
Yeah, certainly, Matt. I think we've had a really fantastic year. I think back over the sort of, I took over in March last year until March this year. We've seen phenomenal progress on site. So first of all, the access road and water, as you're aware, were both completed. But now we've moved into the internal roadworks, we've moved into construction power, and we've also moved into our bulk earthworks. All of this part of what we call in early works, really, which is enabling the project to move forward. But I think some of the positives and some of the stories related to this that really have been meaningful to us were, first of all, I think I told you many, many times that water on site was never an issue. And we took the same philosophy that we're going to use in operations and built a storage dam on site with 10 days storage. And since we built that dam, we've had 2 notified stoppages of the desalination plant. But because we had 10 days storage on site, we haven't actually had to stop construction once. So it's really good to see a plan come into reality in terms of making sure that we continue with progress on site. And then the other aspect of the project, which is really pleasing, is all of the blast work that we have to do in the bulk earthworks contract has now been completed with no incidents. And effectively, what's really pleasing about it is the fact that the blasting work, which is obviously a key thing, that's the only stuff that we take below ground, we found no surprises in terms of the groundworks that we've seen on site. So really pleasing to see, once again, what we expected is what we found. So that's been really good from the construction perspective. And I think the other important aspect is to keep our momentum going is we've been focused in heavily on continuing with the engineering design. So it was always our stated intent to get the engineering design as advanced state as possible. So we placed the contract on Wood Engineering to continue with detailed design. So what we mean by detailed design, they're currently working on construction-ready drawings. So they've already issued the construction drawings for the entire bulk earthworks program, and they're currently busy with doing construction drawings for concrete and for structural steel. So it just means that when we place contracts in the future, we have a whole lot more confidence in the design, at least the design maturity. But not only that, we have a whole lot more confidence in the final costs that will be related to those contracts. So all of those aspects have moved ahead really well, and we're feeling very comfortable with the fact that we managed to keep all of our contractors as Namibian contractors, and that they've continued to deliver on schedule and also under budget as we speak to date.
Right, and obviously you've got to manage the pace at which you move forward. One, in the context of obviously market conditions. 2, in terms of your budget, your balance sheet as well. So can you talk about looking forward the specific construction engineering activities on a kind of quarterly basis, and what does that mean in terms of major concrete and structural steel work beginning?
Yeah, so that's one of the delicate balances that we've got at the moment. But the timeline at the moment with the 3 contracts that are running is the earthworks and the construction power will come to a conclusion around about mid-year this year. So obviously at that point in time, the cash flow effectively dries up for those two contracts. The bulk earthworks runs all the way through to mid-year next year. So one of the key issues for us, as you know, from the beginning, has been to make sure that we've got sufficient cash in the bank that allows us to actually ride out any lows in the market, which is actually playing out right now as we speak. So the balls that we're balancing is around how we continue with the progress on site while not exposing our runway in terms of the cash in the bank. So at the end of the year, we had 81 million in the bank, Australian, and that gives us sufficient runway to actually take us well into next year. So what's good to know is that we still don't have any debt, and that all of the contracts that are currently running have been committed and are already in our cash flow numbers. So people have got a very good feel for where we're at and how much of the money that's in the bank actually just goes directly to overhead and runway while we wait out the market to potentially start moving.
Right. Okay. And how do, obviously that makes it very difficult for you to be able to kind of guide the market in terms of completion, start dates, production, etc. Because what we've seen in the market is a huge supply constraint. Whatever you think of the demand numbers going forward, huge supply constraint, and those that can get into production seem to be benefiting from that. But this is a kind of go slow, managed approach to, I guess, getting to a point where the market can understand whether you will be a producer and when you will be a producer. Is it kind of frustrating for you having to work like this?
Yeah, it's always frustrating for a project manager to be held back by constraints, but also you've got to look at it from a business perspective. Is being prudent and taking your time is the right thing to do. However, as we speak today, our target to get uranium into the market by 2028, which is what I've been telling everyone, is still on track. But we may get to a point where we have to address that because we have a fund constraint. So right now, the project team is focused on finding smaller packages that will still keep us on track, which take less money out of the budget. And at the same time, we obviously got a full-blown, a number of work streams still running on the funding side. But as you can imagine, to finalize financing when your markets are depressed it's not easy. And that's one of the reasons why we've brought Matt on board, who managed to be involved with Peak and take them through a fairly difficult patch. And I think some of the experiences that he's gained there are going to be very helpful for us as well.
Right. And obviously, okay, in terms of this kind of risk mitigation, and so being careful with the money that you've got is great. Are there any other kind of factors which kind of may come into play as this, again, market conditions, or it's difficult for companies to manage. I get it, and I don't want to put too much pressure on you in terms of this conversation. But things like supply chain disruptions, like we've seen for the last 4 years, do they continue to kind of affect business? Are there kind of factors like increase in capital requirements going forward? The longer this drags out, are you going to get hit by some of these increased costs, which still seem to percolate through the marketplace? What are the risks that you're trying to manage other than cash preservation?
Yeah, no. So the project is fully focused on capital control. So I think one of the important things is, as you would have been aware, is post the DFS we published a revised CBE, and that's the number that we're managing to. And as we stand to date, managing very well against that number. But obviously, if the project pushes out by an additional year, there may be some impact. But right now, we don't see that impact. And looking at the project as it stands now, we're still in a fantastic position to complete this project on budget. But if we get to the point where we have to move, at that point in time, we would also then have to update everybody around what we think the impact is. But as we stand today, I'm still very comfortable that the number that we published is achievable.
Right. And in terms of kind of construction-related risk, things like, as you kind of slow down and others slow down, for all the right reasons, contractors get affected, planned revenues are not there when they thought they might be there. How do you kind of manage that aspect of things, making sure that the contractors you want to work with will be there when you want them to be there? Is there a plan B?
Yeah, so I think that talks to a lot of what our strategy has been. And I think on day one, I always said that we need to make sure we secured Namibian contractors who were capable of doing the earthworks. And we've done that, and they've proved that they are. So the earthworks will be finished. So the next focus point becomes the concrete work. So right now, we're in the process of adjudicating concrete tenders and potentially benefiting from that process, because we've gone out on formal tender and adjudicating now for contracts that we fully intend to place. So in other words, we're not getting some guy who's putting a markup on a project because he's not sure if it's going ahead. This is the final tender. So whoever wins this tender effectively will be doing the concrete work for us. And once again, as we broke that down, as I always said we would, into slightly smaller packages. And by having slightly smaller packages, it means that we're enabling smaller Namibian contractors to potentially take a bite of the concrete instead of necessarily just placing a single concrete contract. So all of those aspects we're currently using as a plan A and plan B. And that's the way we've tendered the work as well.
Right. And in terms of how you kind of manage and write up those contracts to kind of protect yourself, have you kind of locked in material and labor costs with them? You know, is it kind of fixed price contracts, or you know, can you get caught out down the line? Have you protected yourself?
So, I mean, when we've placed our mechanical contracts, what we've done is we've placed a two-phase contract. First phase, effectively to secure the vendor data, and second phase to then issue them an instruction to commence with fabrication. But in that process, because the fabrication date has never been a line in the sand, we built in, as part of the adjudications, we built in the escalation formulas. So we secured the escalation formulas in a competitive environment and basically made it mechanistic. So if indices go up, we can calculate how much the contract cost goes up. If indices go down, we can calculate how much we're going to save on the contract. So we've used the same process in our remeasurable contracts. So what we currently at least adjudicating are tenders that have also got a split in terms of the different indices for escalation built into the contract. So in other words, once again, we're seeing contractors having to compete with a known formula for escalation. Because the worst thing you can do is not have that known up front, because then depending on where their biggest increases are, they change the factor to make sure they get the most money out of it at the end of the day. So making them do it now just keeps everybody clean and clear and above board.
And do you sort of track, and I know it's very difficult with private companies because it's, you know, probably annual events in terms of submitting accounts, but are you comfortable with the financial security of the contracts that you're working with? There's nothing worse than starting with a contractor who goes bust halfway through. So how do you manage that?
Yeah, and I think that was part of the reason why we broke contracts down into smaller packages, because there are limited budgets or balance sheets for Namibian contractors. So you can't afford necessarily to give them the entire scope of concrete, but by breaking it down into smaller packages, you're basically reducing your risk around any potential.
Okay, so it comes back to that. Okay.
Yeah.
Okay.
That's really,
and does this also
3 years? Yeah.
Right. Okay. So it comes back to that. That's fine. Does this also obviously mitigate the any issues around securing skilled labour for you in terms of, again, that ratio between contracted and in the house? How are you finding the labour market at the moment?
So at the moment, we haven't had any problems with labour or plot. So on the contracts we've currently placed, we've had no problem. And to give you an idea as well, we've also placed the mechanical fabrication order for the tertiary crusher, which is the HPGR. And that's been manufactured in Germany at the moment. And they're actually ahead of schedule and are ready to sort of deliver it probably a month early to site. So, you know, from a fabrication perspective, which is done off-site, we're not seeing any issues at the moment. The on-site stuff, by breaking it into smaller packages, we're securing the labor, which already is in Namibia. So it's available labor in Namibia. And by being sort of the first mover in terms of placing contracts, we're making sure that we can tie them down in the contract to actually have the labor available to us when we need it.
Right. Okay. I want to bounce over, sticking with risk, because that, you know, you had that interesting phase where if you kind of, you know, knock these things over, you get closer and closer to, you know, delivering. we've seen some headlines in the press relating to issues over at Deep Yellow around licensing issues. Is that a federal issue, or is that sort of to, between companies? Because it seems to be there's a group who seems to be bringing this forward. Are you going to be affected by anything similar?
No,
I guess what I'm trying to worried about.
Yeah, no, not at all. I don't. This is not government driven at all. It's an issue between two separate companies that are resolving a technical issue. The government happens to be involved with it, but not because they're driving it. It's been driven by the two companies, and they need resolution on the issue. So we certainly not facing any of these issues at the moment, and we certainly don't expect to face any of them. And because it's not government driven, and we know that our license is secure, I don't believe we should be worried about any issues across the whole of Namibia. This is really a very specific thing between two companies.
Right. Okay. So with regards to your mining license has been issued, are there any other approvals needed before full scale production construction can begin?
No. So all of our primary approvals are in place. So all environmental licenses, the mining license, the Heritage Council, all of that is in place and is operational. And in fact, we had a very positive visit not too long ago, about 3 weeks ago, from the executive director and the mining commissioner, or from the mining ministry. And it's the first time they've physically visited site, and they were very pleased with the progress we've made over the last year. So we got very positive feedback from that visit. So certainly we don't believe there's anything missing. There's a couple of secondary licenses that we probably need before we start, let's say, blasting the pit. We will need to have explosives sorted, etc. But nothing all the primary licenses are 100% in place, and none of the secondary licenses do we expect any problems with.
Right, and just be clear about what the difference between a primary license and a secondary license, because I guess you need all licenses in place. So how do you define that?
The only reason I mention that is that from a blasting perspective, you will eventually need a permit to store your blasting materials on site. We're not in that position at the moment, but when we get there, then you apply for it and you get permissions. And the license will actually be held by the mining contractor, who we haven't appointed yet. So we can't get that license until we appoint the mining contractor.
Okay. And with regards to engagement with the new Namibian government, certainly new Minister of Mines, what are you doing with them? How are they engaging with you?
I think this is why the visit from the executive director was so important. Is those are the guys who are running the mining ministry from an operational perspective, and the fact that he's taken the effort to come and visit the site is really positive for us. And the fact that he's done it over a number of mines also shows that operationally the mining ministry is still functioning while they wait for the final announcement of the mining minister. So the fact that one is a political appointment and the other one is an operational appointment, we're keeping the operational relationships really strong. We've always had a strong relationship with the ministry at a minister's level, and until we know who will be the mining minister, it may be the same person, we're not overly concerned. We believe that it's been a very stable election, and we also see that we should expect new announcements of ministers in the not too distant future.
Right. Okay. So I think okay, that's interesting. So they are engaged, and there's no issues working in Namibia. There's no issues with their concerns over uranium being mined in country. You've been doing it a long time, so all good. Nothing you want to point to.
Right. I mean, as I've always said, is Namibia is Africa light and really is a pleasant place to work. And the fact that the meeting with the executive director was at their request. It wasn't like we were trying to get hold of him to come and see the mine. He actually reached out to us, which was, I think, a very positive sign, particularly in this hiatus that is always caused when you get new cabinet ministers potentially being appointed, is the fact that that's when they reached out. Shows me that as an operational department, they're really operating really well.
Right. Okay. Just in terms of some of these, you mentioned some of the kind of logistical construction components that you're looking at now, and obviously, water was a big part of that, and will continue to be a big part of that. Power to site. road access, all of the above, all important, and that's great for the here and now. What works have you done, or what conversations are in place, kind of like post the build, because these are usually long lead items, long lead discussions, I should say, when it comes to transporting uranium to global buyers, to the ports, etc. What's the infrastructure look like for that, and how do you utilize that?
Yeah, so in terms of getting the uranium from the site eventually to the converter, is effectively our responsibility is from the plant all the way to the gates of the converter. So we've engaged with a number of logistics companies that have been doing this for a number of years in Namibia. So, we understand how the process works. We understand that empty containers get delivered to site. We then pack them, and then effectively they go into the port. And the constraint really is around the ships, and we've also got a very good understanding in terms of what that restraint is. So we've got 3 different companies that have given us quotes in terms of what the logistics will look like. And not too worried about it. And the thing that really is positive for us is the number of sort of logistics agents in Namibia that have first-hand experience of the process. So, not only have we gone to shipping lines, we've gone to sort of clearing agents, etc. So we've dealt with the full scope of the logistics from the mine all the way to the converters.
Right. Okay. Interesting. And is there any kind of, again, government help around that, or government funding or tax incentives for you for that stage? I know that's at the kind of the back end, but again, those conversations must have been had.
Yeah. So you're talking about when we bring stuff in to build the project?
No, I'm literally gone the other side. I'm assuming all goes well. You've told me, you're carefully going through a process, and we'll come in a second in terms of funding to kind of obviously get the thing built. But I'm looking at the kind of back end now, where you are, exporting yellow cake. What's that look like in country? What helped you get financial or otherwise from the government?
So no real financial help, but effectively what has to happen is before we could sign any contracts, we have to get them approved by the government. Not that they're part of the negotiation, but effectively they have to sign off on the contracts for us to be able to get the export permit to be able to export the uranium. So we've already started with initial discussions with the responsible person in the ministry. So we got a very good understanding of exactly what we have to do, when we have to do it, and what the timelines are to get approval. So all of that has happened as well, and that's been sort of one-on-one engagements directly with the responsible person at the ministry.
Right. Okay. Well, let's get to, I guess, the meat of this, which is, it's a tough market out there. I think, spot prices come off. I know that you guys like to talk about, term contracts being the kind of real drivers here, but in terms of momentum, spot price seems to have caught everyone's eye, and here we are in the low 60s. Off of highs of 107, the beginning of 2024. How does that affect the way that you operate? How does it affect the timing for going out to market to attract money? It seems the shine has come off the space somewhat. Can you tell us a little bit about those conversations around trying to understand what capital is available and what it's going to cost you?
Yeah, no problem. What I'm going to do is I'm going to make Matt earn his money here a little bit, but before
good stuff.
I would just like to say the disconnect between the spot price, the term price, and obviously what the spot price does to our share price is obviously something that we've fairly heavily focused in on, because it does affect our strategy moving forward. But Matt's only been with us for a while, but he's pretty much up to speed on it. So I'm going to pass him the ball and ask him to maybe talk us through this a little bit.
Yeah, no problems, Gavin. Gavin's spoken to our strategy before, which is around being patient, be prepared, and that's certainly a strategy which we're taking on to our funding as well. Key things for investors: we've got $80 million cash in bank. We're not come raise, and we're continuing to make very good progress on site with a number of key technical work streams. I think it's fair to say Bannerman has had a strong market support for its very disciplined approach to capital allocation. And I think, to your point, Matt, one of the worst things that we could do at the moment is pull the trigger preemptively on highly dilutive capital rates. So in the short term, as we wait for the market to rebound, which we're very confident it will, it's really around maintaining optionality across the different funding work streams that we're progressing, right? So continuing to engage with a number of investors on the equity front, continuing to make very good progress on our debt work stream, but then also given the strategic nature of the Etango project, no surprise that there are a number of parties with interest in taking a strategic stake in the project as well. So it's around maintaining optionality across those work streams and ultimately bringing those together, optimizing an overall funding solution for Etango, which delivers value to shareholders.
Right. Let's get into that. Potential for strategic investors to come in, because there's not too many advanced projects out there, and the supply part of the equation seems fragile at the very least. We're hearing stories of utilities actually signing lots of small term contracts because they're not quite sure that the supply story on top of some companies is as advertised, i.e. they're not quite sure on timing, they're not quite sure on the ability for those companies to economically mine at these rates, or even at $100 plus. So they're kind of hedging their bets a bit. Does that hedging of the bets from utilities, does that affect the type of conversations you have, and the size of the contracts that you're able to get from them? Does the fact that you may be talking about strategic investors, whether it be industry or, quite frankly, money from China, affect your ability to have the conversations? Can you tell us the nature of the kind of the moving parts, and where you'd like to steer things to, and maybe what the market conditions are allowing you to steer things to?
Yeah, so Matt, maybe I'll talk a little bit on the contracting side. So obviously Olga is still going on with discussions with various utilities. So those discussions, as Matt mentioned, are one of the work streams that we're chasing. But I think the important thing as well is what we are seeing is a genuine interest from utilities wanting to contract. And potentially that makes it very attractive for us. And, you talk around the uncertainty of how long it takes to get a uranium mine into operations. I think one of the key points, and it's something that was pointed out to us in our board meeting a couple of weeks ago, is this particular project is actually celebrating 20 years this year from when it was first pegged. So if anyone wants to get a feel for how long it takes to build a mine, even in Namibia, which is Africa light and is really user-friendly, it's taken us 20 years. And there's lots of factors that feed into that. It's not just the country and the permitting times that things take, but also what is the market doing around you. So the fact that it's taken us 20 years to get to where we are, there's probably a little bit of a light bulb going on for some people out there around, you don't just go out there and turn on a uranium mine overnight. It doesn't happen that way. So I think that's a big factor in what we're seeing in supply in the market at the moment. But from a marketing perspective I think utilities are interested. It takes a while to get anything signed, and we certainly haven't got anything signed. But there's both on and off market conversations currently happening. And, until you actually reach an agreement, you don't have anything. And we're in that position. We don't have anything. But we're certainly in the conversations that are moving us hopefully towards something. And the reason we want to move towards something is, at the end of the day, some of our financial solutions are going to be reliant on contracting. So we can't afford just to ignore it and say we're only going to sign contracts when it gets to a certain level. Is we will layer in our contracts, and we will start at a reasonable level, and we'll slowly but surely build up our contracts. So even though we're not going to draw a line in the sand around FID, it doesn't mean that we're not going to necessarily contract, because we certainly are working on a strategy of layering in contracts to get the highest average possible. So that's where we are at the moment in terms of moving forward on contracts. And I can't really say anything else apart from that.
Right. Okay. But again, I do want to kind of drop down a couple of levels here in the sense that you've used the word Africa light, right? So, and which I understand. I've worked, 20 plus countries in Africa. I understand what you mean by that. Namibia is, my experience, good place to work compared to some, but it's still Africa. And how do the utilities view Africa? Not helped by stories like Mali and DRC, and I sometimes think some of these groups, they think Africa's one country. Clearly not, but it's that kind of narrative in a conversation when you're trying to negotiate contracts. Is that there, or do people understand the ability to do business in Namibia, your ability to produce, yellow cake and sell it into market? How much of a discount are they applying to you in these conversations, if any?
Yeah, so this is probably one of the most pleasing aspects of it, is there aren't too many utilities out there that aren't aware of Namibia and the ability to deliver yellow cake. And the fact that they've been running for 46 years, these utilities have probably visited one or other of the sites in Namibia at some point in time. So it's, they've actually had feet on the ground in Namibia, I would suggest, over a 46-year period. And we haven't had pushback around Namibia at the moment. In fact, we've only seen positives. And the other thing is what I was talking to just now around the utilities wanting to bring in diverse supply, is we're also not seeing a massive discount necessarily being pushed down on us, because they're more interested in diversity of supply, as opposed to, in a traditional market, you would potentially have to pay a penalty or a discount to be able to get your feet in the door. Whereas what we're seeing here is potentially we can get in at the same sort of level as most of the other people, maybe not all of the big suppliers.
Right. Okay. Those contracts are required for you to be able to get funding in place once you kind of got to this kind of, when they've been through this kind of feed process, you say, right, we now know what our kind of capex requirements are. We'll need the money at whichever point you decide to kind of press the big green button on this thing. Where's that money going to come from? Obviously, China making some big moves in Kazakhstan with Kazatomprom, etc. We're in various conversations out in Niger, where obviously with the coup has kind of thrown everything, the balls up in the air. And you've got big Chinese operations in Namibia at the moment. Do you think the West is going to be able to move quickly enough, make capital available quickly enough to allow you to take advantage of that? Or is it a case of, first come, first served? What's your attitude?
I'm going to ask Matt to talk to it in a little bit more detail, but my initial answer to your question is I believe that the West probably will be able to move quick enough. Because we got so many balls in the air at the moment, I really believe we'll find a solution that basically works for everyone. And keeping in mind, one of the big positives about Namibian uranium at the moment is we can sell it east or west, and potentially, as we stand today, we can sell it with no tariffs. But I think Matt can maybe talk a little bit more to sort of the breakdown of the different types of funding that we would be looking at. We certainly don't have an answer for you around what the percentage will be in each area, because we're still playing with those numbers. But Matt can certainly talk us through the different work streams.
Yeah, and to maybe just build upon that point first, I think it's a point which is sometimes missed, in that Namibia remains politically independent, and that's a real point of strength for our project. Certainly when you think about some of the broader geopolitical tensions we're seeing around the world at the moment, we can sell to and continue to sell to many places and secure funding channels and avenues that other projects just may not be able to tap into. to answer Gavin's question, yeah, we're continually whiteboarding what funding could look like. Again, that's a real strength of the project, in that there are lenders, looking to get their foot in the door with uranium, and Gavin's spoken previously about the progress that we continue to make on that work stream. We've got a market cap which can support the funding quantum of this project, which again is a real point of strength to have. And then it's around how we potentially augment that further with potential project level strategic investment. No surprises that some of the parties that we're talking to in that particular work stream, one real key point of attraction is the multi-generational aspect of the project. This Etango will be in operation for many decades to come. So the option value of getting your hand on long life offtake, that's very attractive to a number of parties. So we have all those options available to us. And it's just around continuing to optimize those to come up with the best funding solution when time comes to pull the trigger.
Right. Well, there's the kind of, as Gavin said, you can choose to sell east or west. No problem. It's the funding bit is the interesting. People are looking at this kind of bifurcation of the market, sort of stemming out of Russia, China, Kazakhstan, or Kazakhstan specifically. And obviously a big Chinese presence already in country. You've got a big project in Rossing, Husab, Langer, Heinrich, etc. I guess there's an expectation it's probably worth more to one group than another. And as you move forward through to some kind of financing option, I guess the market's kind of interested in, will this further bifurcate the market? The fact that you're in Africa and you've got a lot of sort of Chinese operators. So you've got a lot of Chinese presence in country already. Does it affect your thinking at all in terms of I guess it's somewhat some pressure on you to maybe work with Western money, and the kind of slightly antagonistic language coming out of Western funders saying if there's Chinese involvement here, they're an adversarial component which we may not be happy to work with. Do you have to pick one side or the other, or can you genuinely say, well, actually we can work with all of the above?
As it stands at the moment, we can clearly work with both sides. If something significant changed, I wouldn't know what that would be, but right now we can clearly work with both sides. And the fact that we have a variety in the data room is also good for us. Okay.
Right. So 2025, we're already a quarter of the way through. What can we look forward to see from you guys this year, as best you can predict?
Well, I think Matt needs to finalize the funding for me, and then I'll be happy. I can build the project. But in all reality, we will see the completion of the roadworks. We'll see the completion of the construction power. We'll continue with the bulk earthworks. We potentially will see one or two additional contracts done. But I do think before the end of this year, we will see some form of movement on final financing solutions. Be that whatever that mix may be, I think that will likely to occur before the end of this year. But once again, Matt, we're not going to draw a line in the sand and say FID date is on X or Y. It's going to be driven by the messages we're getting from the market.
Gavin, Matt, thank you. That is a great update. I'm glad things are moving along well there. And I hope to maybe come out to site soon and sort of see how you guys are progressing. Appreciate your time today. Thank you.
Cheers, Matt.
Excellent. Thanks, Matt. Appreciate it.